This is Basket Case Clubs, CPR Group's podcast where we turn basket case clubs into showcase clubs. Hello everyone and welcome back to Basket Case Clubs. My name's Michael Connolly and it is my pleasure to be your host on Basket Case Clubs, and joining me as usual is my brother and basket casey goodness compatriot, Steve Connolly. G'day Steve, how are you travelling?
We are bloody great. We are back, baby. We're back on the podcast train. I'm being really careful not to say wagon to make it sound like I'm having alcohol problems.
You know what, though? I had been sure I'd made a little bet with myself. How do you make a bet with yourself? I tell you what, I'll give me $5 if I. Anyway, that you would say it's
That's
been
a great
long
bet.
time
You're always
between
going to
drinks.
win. Yeah.
But instead of that, you went on the Alcoholics Anonymous rant instead.
There you go. Yes, but no, I have missed you dearly and all of our listeners, and I'm very excited about today's discussion topic.
Oh, nice. So today is Monday. I almost said Wednesday. Why does it feel like Wednesday? It's Monday, the 22nd of April, 2024. So, Steve, I've got to say something very important to you. Happy Earth Day, buddy.
Hey, happy Earth Day. Yay.
Yeah, it's just let me turn some lights off around here or on.
No, I'm sitting in the dark and recording without power, so I win.
Yeah. Oh, I'm just laughing at the fact that you kind of can't record when you're using a microphone that requires phantom power.
Yep.
But it's only 48 volts and it's coming out of your USB port. So I'm running off battery. How about a sustainably produced battery? Anyway, I would like to use the sustainability. Isn't sustainability a funny word? Sorry, I've just derailed my own train of thought there.
How uncommon for you to derail yourself.
Because sustainability is a funny old word, and you can just put it in front of anything, and it then makes it sound like you really care about the planet. So this is a sustainable podcast. What in the name of what makes it sustainable? The fact that while I'm here, I'm only drinking responsibly sourced water. Responsibly sourced as in I turned the tap off after I put it into my aluminium drink bottle.
You've just stumbled across a great marketing ploy here.
Go on.
This is a sustainable podcast. Just let's wait for people to challenge it. There you go.
But how often do you see the word sustainable in places that you just go, what makes that sustainable bread? Just spitballing. What makes that sustainable rubber on the tire that's now on my car? Interesting. Anyway,
these are sustainably sourced ideas for improving your club.
Does that mean that there's an endless supply of them? It's a renewable resource. Our ideas for
it does.
Goodness are renewable resources. All you got to do is just have more good ideas.
Yep.
Oh, nice. So yes, so the word sustainable has and Earth Day is a good chance to mention this. The word sustainable, immediately what it conjures up is environmental sustainability. But what we've been talking about in our little mini-series it's one of those mini-series that becomes a macro series on financial management for sports clubs, is financial sustainability. I generally have a bit of an issue with the term financial sustainability or sustainability in clubs, because if you're sustainable, it can mean that we're just continuing with the status quo because the status quo is not driving us bust. But that can mean...
And it can be a celebration of mediocrity.
Yeah.
We're doing all right.
Yeah, a celebration of breaking even. But profit and not-for-profit are different things, remember. You're allowed to make profit. In fact, you need to make profit because a club that is growing is more than a sustainable club. It's a viable club. So we get a tick in the sustainable box because we're likely to still be here next season. But a really viable club, and especially a financially viable club, is going to be here next decade. And that's what's, I think, more important. And that's kind of where I'd prefer to focus when we talk about financial stuff in clubs is let's talk about financial, what was our last one called? Crushing your goals.
Crunching numbers, crushing goals.
There you go. Crunching numbers, crushing goals. Let's crush it, baby. Anyway, that was and now that I'm looking at the topic for today, Steve, that was
a rare segue.
Yeah, it was a very enthusiastic and look, I'm inspired. I'm feeling motivated. I'm feeling driven. And now we've got to talk about tax. What better way to go from being on an absolute high to tax? Oh. So this year, 2024, is when the Australian Taxation Office is introducing some changes to income tax exemption reporting for not-for-profits. Now, before we get into what those changes are, and there's not actually that many, what please don't shoot the messenger. It's not it's not us that's doing this. It's the ATO. But we are using every platform that we've got to try and alert people to these changes, because I think it's very unlikely that the mums and dads who are committee members in most of our clubs are connected with the ATO on social media or subscribe to the ATO's not-for-profits newsletter, which is actually quite a good read when it comes out about every month. It's a good read. So we're trying to let everybody know, because there's a good chance that people will miss this. And if you miss it and the ATO cracks down on clubs who have missed it, then you could lose your income tax exemption, which means that of all of that lovely profit that should equal growth that you make, you could be assessed for income tax on it. So you don't want to mess it up. So we want to get on the front foot with everyone. But the important thing that I wanted to start with is nothing is actually changing as far as what you've got to do, except for now you've got to submit the work that you do to the ATO. So that's the only thing that's changing. And there's probably a few of you driving along, walking along, lying on the couch listening to this going, say, we've had to do something. Say what now? So when you go to any of our resources that talk about the AGM, for instance, you'll see that it has in there a bit that says, hey, now's a good time to confirm the income tax exempt status of your organisation. So sports in Australia are actually pretty lucky, and we'll only just do a quick flyby at the end about what this means for groups that aren't sporting clubs. Sporting clubs in Australia, because the purpose of the organisation is carrying on a game or sport or animal racing, then you can self-assess for your income tax exempt status. So being income tax exempt, if you go right back through, it comes up each time we talk about money or the benefits of being an incorporated association that is not for profit, is income tax exemption. Now that's a massive benefit. Just imagine how much of a pain in the ass it would be if every year not only did you have to do your annual return to Consumer Affairs or Fair Trading or whoever it is in your state or territory, but you also had to do a tax return. Like that's because there's another reporting agency in there. You don't. But worse than that is if you are a really successful club and you are crushing it and you're making bucket loads of money, then you also have to remit income tax. So you're then worrying about your depreciation, and then even as far as asset management goes, you're listing all of your non-current assets on your balance sheet so you can depreciate them, which makes your depreciation schedule so much more complicated, and it would be more work and more expensive. So you don't have to, purely by nature of being a sports club. So that is a fantastic benefit. But to prove that you are a sports club, you've had to do an annual self-assessment. So there's always been this little checklist that you go through. It's a few pages. It's very simple because you are a sports club. So that's what makes it just an easy, yep, that's us. Yep, that's us. So basically what it's going to ask is two things. Do your constituent documents demonstrate that you're a sports club, which means that you look in the objects of your constitution, and does it say sport, something along the lines of to enhance and foster and promote and run the sport of whatever the sport is. So that's definitely going to be an easy one. And then the second one is, during the last year, did we run that sport? So go and look at your website or your Facebook page and you say, oh, look, we did. And that's exactly the sort of assessment that the ATO would do if you were audited. So they would look at your constitution, look at your objects. It's going to say the sport in there, but then they're also going to do some snooping and say, what are the activities that this club is doing? And if it's sport, you get a tick in the box. So now the only thing is that you've got to submit that to the tax office. So to do that, and this is the bit that you can already get ready for, and if you're listening to this recording down the track, you're going to go, oh, that was years ago. But the hardest thing to do has been if you weren't at the club when the ABN was set up, because obviously this applies to clubs with their own ABN, Australian Business Number, then you won't necessarily have access to the ABR, the Australian Business Register, where that register of your ABN is housed. So you can't make changes to it. What you now will need to do is to be able to log in through your ABR, through an ABR portal, so through your ABR, your Australian Business Registration, to be able to lodge the form. So this is the bit that clubs need to be prepared for, because that could be the time-consuming bit.
This will be the pain in the ass. So one of our staff is president of a sporting club, and he sat online with another member of our team last week, and not online, on hold twice to the ATO, same day, in excess of 30 minutes both times. First time, ATO just hung up.
Oh no!
Just got disconnected.
Oh
No queue, no callback, nothing. So, and the second time wasn't a success either due to various reasons. So, this will be the challenge, undoubtedly. The actual reporting we expect is likely to be, as you just said, based on the form that's existed for already many years, the self-assessment tool, and I expect that groups are going to need to provide the most amount of information in the first year, and then each year thereafter, it's just going to be nothing's changed. So yes, we still tick all of those boxes, but it's going to be the process of actually connecting the right person to the organisation with the ATO that I think will pose the most challenges. Anyway,
so connect with them. That's what they're saying. Is if you want to get connected, but do it now. So do it nice and quickly. Yeah. So
that's the rush.
Well, and unfortunately, it sounds like you're gonna sit on hold for a little while, but get it done early because, like Steve, like you just said, they say it's going to be 10 minutes or less to do the reporting, which, having been through that self-assessment process many times,
which I'd agree with.
Absolutely, it's 10 minutes or less. Like for the most part, it depends how fast you read, because putting a tick in a box and putting a tick in a declaration box is actually really quick. It's just how long it takes you to read it, and it's not a lot to read because it's simple for sports clubs.
Yep.
So that's really the guts of it. I was going to say a warning. It's not a warning because it's just coming. It's more by way of using as many platforms as we can to get people aware that this is a change that's happening, because most people aren't connected to the ATO, as I said.
And there are, just for what it's worth, a bit of a philosophical sharing of my perspective here, and you can let me know whether your position aligns with this or not. But there's a heap of clubs in the country that have traditionally slipped through the cracks or flown under the radar, or whatever metaphor you want to use. And they should have been paying income tax, and they have not been paying income tax. And because of this just complete kind of ignorance, and I don't mean that in a derogatory or pejorative way, because people in volunteer roles have got other shit to focus on. So being across something that the ATO is never going to follow you up for is probably not going to take priority. We get that. But it's important to note that there's potentially, I should use that term, there's potentially a lot of tax that has not been collected by the ATO, by these organisations that have been, let's, in air quotes, say, have been self-assessing because they probably just haven't been doing it. Yeah,
no tax.
So those groups that should have been paying tax are not going to now, through this rollout of the new reporting requirements, they're not going to slip through the cracks. The ATO is going to collect that tax. And it's important to note, as you kind of pointed to, the clubs that are crushing it and are making heaps and heaps of money, they've just got to recognise that, 2/3 of heaps is better than 100% of bugger all. So, as many accountants say, if you're paying tax, you're making money. So recognise for those more sophisticated clubs that are significant business entities that are turning over a lot of money and are undoubtedly doing great good in their in their local community rather, sometimes they're going to have to start paying. Some of those are going to have to start paying tax. And I think that's okay. I think that, for what it's worth, that the ATO getting the tax to which they are entitled is, sure, we all say, death and taxes are the only things that are certain in this life, and we all grumble about paying tax. But the reality is that, like it or lump it, tax is often put to really good purpose, and we just need to acknowledge that those organisations that are truly eligible for income tax exemption and which can demonstrate that through the simple reporting process are going to keep getting that benefit. And as you said, just to reiterate, nothing's changing. And we've seen some, media articles coming out over the last few weeks. Groups are up in arms that, they're not ready for this change. Well, it's not a change. There's actually no change in the eligibility. It's just a matter of reporting. Yeah. And look at all this income that's going to be lost, or, profit that's going to be lost for these poor organisations.
If they've been cheating, then it's tax evasion.
That's right.
What's his name? Is it Kent Brockman? Is he the newsreader on The Simpsons? Yeah. Didn't he say tax evasion?
Tax evasion, I can't recall, but yeah, good.
I'll say it if I want to say it. Yeah.
Sounds a lot like a Simpsons quote. Yeah.
Yeah, anyone who is avoiding tax though illegally, it's not
It's
okay.
kind of a big thing.
Well, and let's now go to who this is. Sorry, this is purely opinion and possibly conjecture. But who's this for, Steve? Who's been dodging the tax?
The big successful clubs.
Yeah, well, the big successful clubs who are making their money primarily from other sources of income than sport.
And I think
So
we've talked about a
yeah,
significant example in the past from the early thousands.
yeah. So it's still that. It's still the Pokey Palace
Yep.
Leagues Club type operations that that are claiming income tax exemption. And despite what happens with the profit that they're keeping, the line has always been, if you're making money from sport and you're investing, so membership fees and ancillary things that sit around the membership fees. So you might run a bar and you might run a canteen and you might sell some merch, but running a bar and a canteen is part of the entertainment value and part of keeping people at the grounds so that they'll watch sport or play sport. It's all to do with the sport. Running merch is obviously, it's got the club's name on it. It's to get it's fan connection. Where it gets more tricky is when there's a bucket load of money coming into the club, particularly around gaming. So if it's gaming machines, if it's a Pokey Palace, and it's because not only does it make a lot of money, that's okay. It's that a lot of that money that is made has to go get reinvested back into maintaining the Pokey Palace. Because if you don't keep gaming machines up to date, then they won't make as much money. So that means that you've got to, if the gaming room isn't a gaming room an appropriate gaming room environment, it won't make enough money.
You got to pay people there to be there to run it. Yep.
Yep. And look, I've got to wear my heart on my sleeve a little bit here because that's the purpose of this podcast over the other chances that we get in public forums to speak. And I'm not a gambling fan. I don't gamble. I know how freaking hard I've got to work for every dollar that goes into my wallet. I don't want to pull one out and stick it in a pokey.
Knowing you're not going to get it back.
Yeah, just statistically speaking,
yeah.
almost certainly. And I could be that lucky, but I'm not a gambler. And so the connection between gambling and sport is one that does make me feel uncomfortable.
Yep.
But it's the nature of the business in Australia. And if I'm not going to advocate as a politician, which I ain't, like, we can come back to this episode if all of a sudden I end up being prime minister and people can hold me to account and just, you said you weren't going to be a politician. I don't know what it would be, Steve, but for me to want to be in politics, something very significant would have to change in
like everybody else dying.
But hang on, if I was the only person on the planet, I would be emperor. I would be king. I would be president, prime minister. I would be whatever I wanted to call myself. I'd be King Mark.
And under any other circumstances, it ain't going to happen. I agree. Yeah. I'm in the same boat. Yep.
Yeah. So I'm not going to I'm not going to have a political platform to grandstand about this. So it's not going to change by my doing, but I'm not comfortable with it. But it's the nature of the beast. So that means that the clubs who are involved and who make money out of it, it's a very important part of their business. So that's fine, but they need to then, to go back to the gaming room discussion, they need to be investing in the gaming room. So that's going to take money. So the money that they're making is coming from gaming and it's going back into gaming, which is not consistent with the definition of sport, but for the ATO in determining income tax exemption. And that's all it is. So why do they want to get tax out of those clubs, recognizing that if they leave that money in the clubs, what's left over is going to go into sport? Okay, well, what we just covered, that what's left over is less than it could be because of the investment that you've got to make in your gaming room. But it's also that these clubs are in direct competition with other venues that have gaming machines, so the pubs
and which are paying tax.
All of which are paying tax at the company rate. So, or however, whatever their structure is, they're paying tax at the rate that they're, and it's all, save for any cash economy or illegal shit that's going on under the table, they're paying their tax. So clubs need to be doing the same because they're actually in that industry, not the sports industry.
Yep.
So that's what they look at. So the way that the ATO defines it is the main purpose must be encouragement of a game, sport, or animal racing. So if the organisation also conducts, and now the word here is significant non-sporting activities, it needs to assess if those non-sporting activities are merely incidental or ancillary to the encouragement of the game, sport, or animal racing. So that's what I said before. It's incidental that we're selling merchandise because it supports the canteen and the bar examples I gave were the same. And the organisation can justify to both its members and to the public that its main purpose is the encouragement of game sport and animal rescue. And you do that by reading your constitution and looking at the things that you're promoting. So when you look at the Poke Palaces, when you look at their social media pages, they don't talk about typically who's playing whom on the field at what time. They talk about what promos we've got on, who the live music is, what time you need to be there for special gaming promotions and all of those sorts of things. So that's what you're looking for. And it's very clear to see. So even where those clubs, they might be called a rugby club or a rugby league club, if they're running those big, and they might also have a darts club and an 8-ball club and a fishing club and a bridge club and some dancing clubs there. But those things exist because we've got space, and when those people are at the club, they're also putting a few bucks into the pokies and playing some keno, eating some food, drinking some beer. So, and that's the nature of the business. So it's pretty clear. So it's and I said this is conjecture and opinion because I don't sit in the rooms in the ATO. Thank God for that. So sorry to all of our Australian Taxation Office employee listeners.
No, you're not.
And I know there are two at least.
Hey.
Yes. Oh, sorry, there are more than two employees. I'm talking about two employees that are also listeners, overlapping Venn diagram circles there. Oh, so I don't know for sure, but that's my presumption. So there's another type of organisation that is going to come out of this pretty squeaky clean in an easy way, and that is charities. Because a charity is income tax exempt by nature of being a charity. So regardless of what the purpose in the Constitution is, it's a charitable purpose under the Charities Act, of which there's only, 13 of them. And sport, by the way, will never be a charity. It isn't a charity, and as far as I can see, it will never be a charity because it's not for the public good. It's for the good of the people, of that section of the public that likes swimming or football or cricket or whatever it is that our club does. So if you have a charitable purpose, you must be a charity and therefore registered with the ACNC, the Australian Charities and Not-for-Profits Commission. And if you're registered with the ACNC, you must be a charity. So nobody who's not a charity can register, which means that the ACNC is a misnomer, isn't it? Because it's the ACC.
It's the ACC.
They don't do the NFPs, which was, I think we've discussed previously, a dilution at that time, and I'm sure politically motivated. All an opinion, because I wasn't there. I don't sit, I'm not a politician, and it was a change of government yet. And anyway, look, they've got their shit together, and the ACNC, as far as the material that they've got and the ease with which you can navigate their website is fantastic. So if you are also involved in a charity, and I know that a lot of people who are involved in volunteers as volunteers as committee members on a club are also involved as board members on some charities. So go and have a look. Go and check it out. It's their website is great, but then you'll very clearly
unlike the ATOs.
No, the ATOs is good. The ATOs is good, but I think that the search functionality of Google does a better job than the search functionality of the ATO website. Funnily enough,
the ATO website does have a lot of really, really good information on it. It's just that you have to spend time digging, and you have to follow the link from one page to the next, and then you'll find the information that is actually really useful.
And it's better than ringing them and waiting on hold for an hour, at least.
Having the call drop
and
out.
Having a beep, beep, beep. So that still leaves somebody that falls between the cracks here. So, sorry, two types of groups, and there's actually 8 or so. But the other two that I want to talk about are community organisations or community service organisations, because community service organisations are also able to self-assess for income tax exemption. But a community service organisation is going to be the sort of organisation that provides a broad and specific community service. So organisations that fit into this bucket are like healthcare auxiliaries. They're not necessarily a charity in their own right, but they sit adjacent to a healthcare facility. But because it's the entire population that they service, then it's a community service organisation. Some organisations that exist for older people, for instance, like senior citizens associations, then that's who we're talking about. So they fall into the same bucket of sports clubs. They can self-assess, go through the same process of registration through the ABR, and then annual reporting, which is 10 minutes or less. So it's really easy for them, and the same rules apply. But the ones that fall between the cracks, and I think again, opinion, I think these are going to be the unfortunate victims of this change are the groups that aren't a sport, they're not a charity and won't be able to be a charity, and they're not that sort of broad community service organisation. So here I'm talking about model train societies and debating clubs and craft groups and garden clubs that have an interest that is narrow. So it's only a small section of the community. So it's hence why they're not a charity, because it's not the community, the entire community at large. So these are the groups that can't self-assess for income tax exemption. They're not income tax exempt by way of being a charity because they ain't one, which means that they should actually have already been doing an annual income tax return. And this is the stuff that, as I've experienced over the last few months in a number of conference settings, have made people go, what the actual? Like, what? Now, and again, I've prefaced it by saying, please don't shoot the messenger. This is just, so I think these are going to be the unfortunate groups that fall into that category of having a bit of a whack with the wake up stick. There's no more advice that we can give here apart from you're going to have to talk to an accountant about this. And hopefully you can find somebody who's within the organization or friendly to the organization so you can actually get some advice. Expect to pay a little bit at least for it though, because if it is formal advice and is telling you what to do, then it's formal financial advice, and it should be a paid and therefore qualified service that's being provided. But the element of hope here is based on what's known, and you can read all about this on the ATO website, but we'll give you a flyby in case you don't want to go and read the ATO website because, gee, I don't know, you might have anything else to do that is more exciting and interesting. And it's called the mutuality principle. And it means that if your community organization is making money from its members by selling membership application fee or membership fees, joining fees and annual subscriptions, you might be running some events, you might be running, even still running a bar, running some food, running some merch. You're making money from a group of people, and then all of that money and the surplus from that money that would otherwise be taxable income if it was surplus income, it's all there for the benefit of all of the members together, not just one or a small group of members, but for members in general. So that means that the money is there for the mutual benefit of all of our members, which therefore means that it conforms to the mutuality principle. So that while you're still not income tax exempt, that income is not assessable income when it comes to assessable income for income tax purposes. So that's probably as much detail as we can go into here, because it becomes so individual for the organizations that do fit into this kind of crack in the middle. But what I find really interesting about it is these are the guys who might end up struggling, because while it's not okay that they haven't been doing income tax returns if they should have been doing income tax returns, the fact that they've now got to do an income tax return, and I've just said pay for financial advice, means that, and by the way, remember the types of organizations I just said, these are the ones who have had to learn really well how to run on the smell of an oily rag, because there's just not a lot of ways that they can make income. They typically don't have a home premises that they lease for a peppercorn lease fee from council that has a bar or a kitchen or somewhere that they can sell food or merchandise and put trophies on the wall and have meetings and charge things that mean that they make an income. Yet they're going to still have to spend money on these things. So look, we'll see how this plays out, and I hope that I continue to read and I find that I'm wrong. I guess, Steve, I'm comfortable enough talking about it now because we've known about this for a few months. But it's going to be, these aren't the guys that the ATO was chasing. The ATO was chasing the people who are collecting millions of dollars in income. Millions or hundreds of thousands of it is profit, and it's technically taxable because of how they're making that profit, and they're not collecting that tax. But it's these tiny little guys who are making hundreds or thousands of dollars a year who are then going to have to spend hundreds or thousands of dollars just managing this stuff, or a lot of extra time for volunteers that would be actually better spent setting up sewing machines, having discussions with council about access to reduced fee access to facilities, running events. So there's a little bit of, but this is a podcast more specifically designed for sports clubs. So we can just say, oh, well, for most of us, it's all okay, but there's that little bit of me that's dying inside.
In reality, what the ATO rolls out is up to them. And if, as we've discussed in this little short chat, some of the organisations, even those smaller ones that have been slipping through the crack, that should slipping through the cracks, that should have been submitting tax returns, get picked up through this, then at least any pushback can be considered by the ATO on its merits, and they can continue to amend their own requirements and reporting obligations for not-for-profit organisations. But we just need to make sure that we're getting the information into the minds of the people that need it, and that we avoid the temptation to just try and ignore the problem altogether or sweep it under the carpet. So
yeah.
But it is a really interesting time, and this just really quickly, this is one of those clear reminders of the fact that we live in a world where organisations predominantly run by volunteers face an increasingly growing workload, and just existing as an organisation, let alone being a tenant of premises or reporting to some governing body or industry association, the job of volunteers continues to become more complex. And for that reason, taking advice from people like us, people like lawyers, people like accountants, but also looking to take that step to professionalise your operations when it becomes viable to do so, and recognising that a lot of the organisations you were just talking about then may never be in a position where they can afford to pay people to do work. This is another one of those really good reminders that plenty of organisations do need to have consideration for that as part of their future planning. Because we do work with a lot of organisations, and again, particularly or predominantly in the world of sport, where clubs probably should have been considering that a decade or more ago, that transition from a purely volunteer workforce to one that is complemented by some paid people. So it's just another reminder that as an organisation, you exist as a business, yes, a not-for-profit one, in the real world, and you need to do the things that other real-world businesses need to do.
It could also be a catalyst, and I've certainly had this conversation with some of those in the crack type organisations, for reconsidering how many organisations we need, how many standalone incorporated associations we need, because that's how many presidents, how many treasurers, how many vice presidents, how many secretaries, how many annual return fees, how many audit reports or verification statements for which we need to pay. So you can then say, well, why don't we take a step up and say, is there a chance that we can have a single organisation that has multiple functions underneath it? So it's going to reopen those sorts of discussions. But hey, any discussion that opens up opportunities for reducing waste and improving the sustainability of our organisations should be good, right?
Yep, absolutely.
Especially on Earth Day. Hey,
yeah,
you like
nice positive finish.
Hey? Yep. Right back to where we started. Steve, thank you very much for joining. That was a very dad joke side then, and we both did it the same.
Yeah, like a nose laugh.
I love it when I get both the groan and the eye roll from all of my family, because wives are allowed to groan at dad jokes as much as kids are.
That's a win.
That means that's a win. That's a good dad joke, and I think that was one. Steve, thank you for joining me on this discussion that has been interesting, to say the least, and one that has taken a little while, as I said, for me to feel comfortable to talk about. And like I said, I hope I'm wrong. I hope that because I'm not an accountant, I have a personality. I mean, I hope that because I'm not an accountant, I haven't got this wrong. No, or maybe I have got it wrong, and it's actually going to be easier. We go, no, all of those groups are going to be absolutely fine, and there's nothing to worry about. But time will tell. If you are not already connected to us on social media, make sure you do so. I think that probably Facebook and Insta and LinkedIn are probably where we're most active. But of course, you can connect with us via our website, cprgroup.com.au, and of course, sign up to our newsletter where you'll get great little tidbits and information where we honestly try and keep it more educational and letting you know what's going on in the world, rather than just, hey, we've got this service and these services. But of course, we got plenty of things that we do, and we love connecting with clubs for board inductions and new committee inductions and planning and constitutions and all things. Particularly, I should talk about all of the money stuff, because that's what this little mini series / macro series is turning into. So our next episode, well, unless something else comes up and we talk about something else in between, but next time we're talking about one of the things that I really like talking about, and that's how to make shitloads of money. And like, wouldn't it have been good, Steve, if there was a subject you could do? It's, you know, you're looking down the list of subjects: English, maths, science, how to make shitloads of money. We very well will do one on how to make shit tons of money. Oh, crikey, that's probably enough. Thanks, Steve. See you next time.
Can't wait. See ya.
Basket Case Clubs acknowledges the traditional custodians of the country on which we record, being Yugambeh, Turrbal, Jagera and Kabi Kabi land. We recognise their enduring connection to land, waters and culture, and pay our respects to elders past, present and emerging, and extend that respect to First Nations listeners.